Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Market Analyst at FX Pesa. So today is quite a busy day, and we'll be expecting a lot to be happening in the markets as the day goes on. And at the same time, we know that there's a very important news item coming up tomorrow, and already investors are beginning to react to that. Since it's a crazy swing where there is a varied number of expectations. So one of the key highlights for the day is that Elon Musk just posted this morning on Twitter that he expects the Fed to go for a 50 basis point cut on the next meeting, which is tomorrow. So market is already pricing in a positive 25 basis point hike tomorrow. So there is a lot of uncertainty about how the Fed will react to the current information. So it could go for 50 basis points as planned. It could go for 25 basis points as expected. JP Morgan Chase and other banks are expecting a 0 rate hike, whereas other investors are expecting a rate cut of at least 25 to 50 basis points. So with all this kind of uncertainty in the markets, then you expect investors to put their money where their mouth is. And in this case, we'll be seeing out of volatility coming from this. So first things first, let's begin with the economic calendar. So this is the calendar for today. I'm hoping everyone can be able to see this. So early in the morning, 4 a.m., we had Switzerland trade balance, which is basically the difference between exports and imports. So there was a little bit of an underperformance at 3.31 billion francs versus 3.45 billion. So it's an indication that the Swiss economy is slowing down, or basically making lesser exports than imports. So public sector net borrowing for the UK came in at 15.9 billion compared to the previous reading of negative 9.1 billion. So it means that the UK is literally borrowing more. So going forward, we also be expecting more data. So I need to readjust my time here, just a moment. So just move this to GMT plus 3 Nairobi. Then go back to the calendar. Awesome. So we'll be expecting data at 1 p.m. German ZEW economic sentiment, which is basically a survey that shows the optimism or pessimism within the German economy. Then we'll do the same for the entire Eurozone before we look at the 30-year bond auction for the UK. So the most important news for the day will be Canadian inflation data, which comes up at 3:30 p.m. So at 3:30 p.m., we look at the CPI month over month, which is the change in the price of a basket of commodities that are consumed by the average household within Canada. So it basically is the most direct measure of inflation, measures how much of purchasing power is being lost or gained by the Canadian currency. So in the previous reading, there was a spike of 0.5%. We expect something similar. So median CPI was 5%. We expect this to slow down 4.8%. Trimmed CPI was 5.1%. We expect this to slow to 4.9%. And common CPI was 6.6%. And we expect this to slow down to 6.5%. So core CPI made a gain of 0.3%. So we'll be comparing today's outcome with what happened last time. So besides this, we also be seeing another very important speech, and this will be by the ECB President, Christine Lagarde. So she will be participating in a panel discussion titled CBDCs, Keeping Momentum in Uncertain Times at the Bank of International Settlement Innovation Summit in Basel. So this will be very important for the markets right now. So we know that with the current banking crisis, One of the ways the central banks are looking to get out of this mess could be entirely changing the currency and adopting a CBDC. So investors will be following closely, especially on any commentary of a date or a scheduled plan to change the euro into a CBDC. So that will be a pretty important pressure, and it could cause a lot of volatility in the markets. Then towards the end of the day, we'll be looking at existing home sales data for the US, GDT price index in New Zealand, Westpac consumer sentiment at 11 p.m. And then tomorrow early in the morning, before we hold this session at 11 a.m., we will already have received inflation data for the UK, which is expected to have slowed down to 9.9% in February, compared to 10.1% in January. So core CPI is also expected to slow down for 5.7%, compared to the previous reading of 5.8%. So that's it. That's all the news that we're expecting in the markets right now. And now, I think it's time we look at a summary of the key highlights that have been happening in the markets. So I'm trying to remove this. Just a moment. All right, skip this for now. So when you look at the charts, there's quite a number of stuff that has been happening this week. This is the Euro 50 index, or what you call the Euro stocks. Made quite an impressive run yesterday and managed to break the upper trend line and is now headed higher to a key resistance level at 4,185. So this is a very important price level. So once the price gets to this point, we'll be looking for either a break or a rebounds where the market goes back downwards. So a key price level at 41.85 could determine a potential entry point for another trade. So UK 100 also doing the same, or the FTSE 100. So remember, this has been a theme. Market goes up, stagnates for a while, and then drop. Goes up, stagnates for a while, then drops, and similar thing here. So the only difference here is that the market did not drop. In fact, the reaction is opposite. So we are seeing the market move in the opposite direction. So key price level seems like just the previous support, which acted as resistance. So 75.08 seems to be a nice target for the UK FTSE 100. So it's making an impressive recovery since yesterday, and this could potentially be true for the day. So another most important data point is UK oil, which managed to make a very strong candlestick on the daily chart. So the green candlestick with a small body, long lower tail is what we describe as a pin bar, happening close to the support level, indicating a rejection of lower prices. If you check the forward chart, this is exactly how it happened. So we had what looks like a bullish engulfing, this pair of candlesticks. And since then, the market continued pushing higher. And if you move to a smaller time frame, there's another pin bar that happened here slightly around midday. So since then, oil markets managed to recover. This is Brent oil. So there is a good chance we'll be seeing some further upside happening here. So far, I think the largest indicator we may have could be this, where it's a trend line, where the market has been finding resistance. And now, after breaking this yesterday, and now it seems to be retesting, we could be seeing a potential rally to the next resistance level, which is $75.492 per barrel. On the alternate side, if the momentum comes to the downside, then we go back to retesting the previous low, which was printed yesterday at $70.069 per barrel. So it's only a matter of just observing the price action around this area to see where the momentum heads next. So if it's a break up, we go for 75. If it's a breakdown, then we go for $70 per barrel. So dollar index was much losing yesterday. Today, since morning, it has shown some signs of recovery, but not strong enough. So I'm expecting some further downside in the dollar index. And if there's some further downside in the dollar index, then you expect the majors to be gaining against the dollar. So for for the pound USD, I expect a continuation of this trend upwards. You can see yesterday it was strongly bullish. Similar thing for New Zealand USD. New Zealand dollar was losing, but I expect the currency to start recovering against the dollar. And same case happens to the Euro USD. So in fact, the Euro USD has already broken out of this consolidation. So the natural expectation is we see another leg up. So when I talk about price action, I'm observing these levels here. So when you have a break such as this one, I tend to think of this as convincing enough that we have a clear break towards the upper side. So you can even trade it higher and target this area here, which was acting as a resistance, 1.07586. So also remember, you have to do your own research and make your own decisions. So this is not investment advice, nor is it a recommendation to trade. So always do your own due diligence. So there is a good chance that we could be seeing the Euro USD continue to rally and perhaps end the day around this area here. So as for USD CAD, we saw it testing a key level here. So this is a level that was acting as resistance and now acted as support here. And as you can see yesterday, as the market was going down, the dollar losing to the Canadian dollar managed to bounce very well. So the upper trend line holds, and we could be seeing the market retesting this bottom here or heading straight up for this upper trend line. So the key idea is that if the dollar continues being weak, then a break below 1.36557 will be a major signal to go for a short selling trade. So last asset to check will be gold. So yesterday, we managed to see this, and we said we're expecting gold to continue moving higher, but the potential for a retest was also there, and the retest is for 1960. So if I move to the forward chart and zoom out, you can see where 1960 lies. So this is the reasoning behind 1960. So now you can see the market is headed back downwards, in a way looking like it's going to retest this area. So far, something can be identified from this consolidation from yesterday, is that there is some level of support here. So a clear-cut break towards the lower side will be indicative of a reversal in gold prices. And if I extend this line here, then we have what looks like a head and shoulder pattern, which indicates a reversal in prices. So for those who are not familiar with the head and shoulder pattern, it forms the first shoulder here, goes back to what we call a neckline. The neckline is the blue line. Then price goes for the head, pulls back downwards. Then the other shoulder, and then the market is headed back for the completion of the pattern. So once the pattern is completed, it's normally a reversal pattern in the markets. You expect price to break down lower and continue pushing further down. So in this case, a potential target would be a previous resistance level here, which was 1936. So if gold manages to break lower, then a target of 1936 is on the books. So on the other hand, if there's a very strong entry by buyers here, then the next leg begins and we see gold prices continue to rally and get to the previous head. And this is somewhere above $2,000 per ounce of gold. So 2009 could be a nice target if there's a strong entry, but if there's a reversal and a break of this neckline, then we go for 1936. So that's it for today. Thank you very much, guys, and thank you for your time. I hope to see you on the next session. So hi, Rodney. Hi, Paul. Just saw one comment here. Can you explain about the dollarization and rupee influx risk? Is it the reason why banks are going bankrupt? Today, one more bank has been announced bankrupt. Yes, First Republic Bank, which was halted a record number of times, I think 9 times yesterday, and it kept on selling. So the idea is that we will be seeing some further developments happening today. So today we'll be having another session, and this session will be at 4 p.m. before the New York market open. And the key focus for the day will be the banking crisis and the developments happening in the banking crisis. So make sure to check back on the FX Pesa channel during the session, and we will be discussing the same. So last question is on US Tech 100. US Tech 100, NASDAQ, and S&P 500 are all trading at a very key level or a very key resistance level. So this is US 500. I'm looking at the price action from here. US 30, this is clearly observable for everyone. So you just observe the price action around this area and then react to what price does around this area. And for the US Tech 100, the one that has been most bullish, it's also testing a key resistance level. So it's only a matter of wait and see. If there's a break up, you go up. If there's a bounce, then you go back down. So thank you guys. See you on the next session. And also thank you for your questions, Apollo, Rodney, Goko, Fred, and Sultan. Yes, the contagion is spreading in the Eurozone and the UK, but I'm still very insistent that the biggest elephant in the house is the US dollar. So expect some further downside, especially considering the new credit lines that are being created. As a result, we'll be seeing more printing of more dollars and some further devaluation of the US dollar currency.